Alright, so today we are going to do IAS 10, which is event after a reporting period. So this standard is very simple and straightforward. As long as you go with the process, you understand the principle, whatever the scenario that come, it will be very simple for you. Alright, so firstly we have to understand why do we have this standard, why it is important to know this standard. Alright, remember each and every standard has its own principle that must be applied. Alright, so firstly let's understand why do we have this standard. We have this standard because there are some of the events that happen after a reporting period. Alright, firstly let's look at this word. Why do we have this standard? Firstly, let's understand what is a reporting period. A reporting period is the end of our current year. This is the date of end of our current year. Alright. Then the authorization date, this is the date of authorizing the financial statement. Let me give you a clear example. If we have a year which started on 1 January until 30 December, which means that our reporting period is for 12 months, which is ending December, 31 December. So now the question is, those who are preparing financial statement, are they going to finish everything that they are preparing on 31 December? No, they are not going to finish on 31 December, which means that they must be given time to complete everything, then the statement can be authorized. I hope now it's clear. Which means that they can be given a 2 months, a 3 months, depend on the nature of the company. Okay, so if we are talking about IAS 10, we are talking about the event that happened after a reporting period but before the statement authorized. Simple as that. Alright, let's go to this example. Our year started on 1 January 2021 and ended 31 December 2021. However, authorization date will be 31 June 2022. In other words, which means that there might be an event that can happen between 31 December 2021 and 31 June 2022, which means in that case we have to apply the standard which is called IAS 10 event after reporting period. I hope now it's clear. So if the event happened before the reporting period, that's not IAS 10, which means you have to look at the standard and apply. Alright, so now we have different types of the event. You firstly have to understand how does this event work and what do we do after we find that this event is this one. Alright, firstly we have adjusting event. In this event, this is an event that has show indication during the year and the final occur between the reporting period and the authorization date. So in other words, on adjusting event, we are dealing with the event of is an event or is a transaction which firstly happened during the year, but the conclusion happened in the period of IAS 10 or in the period between reporting period and authorization date. So what do we do if we find that this one is an adjusting event? We have to record it on the financial statement of the previous year. Simple as that. So how are you going to pick that this one is adjusting event? Let me give you an example. We can have a building For example, a building can show a crack during the year. Let's say, for example, on June, it shows the crack that this building any time can fall down. Then it happened after a reporting period, the building completely collapsed, which means that there was an indication that the building can collapse. So that event, we call it adjusting event. We assume that that event happened in the before reporting period because there was an indication that this event might happen. All right. So let's go to non-adjusting event. So on non-adjusting event, this event happened between the reporting period and the authorization date, same as adjusting event. However, on this non-adjusting event, there is no any indication that was shown during the year. There was no any indication. For example, entity's vehicle can find an accident or can get involved into an accident. Of course, no one has an indication that tomorrow there might be an accident. This is the event that just happened as a surprise, which means that we call it non-adjusting event because there was no indication that this event will happen. So if this happen, if we found that the transaction is affected by this non-adjusting event, we don't record it because it has never happened during the year, or there was no any indication that this event can happen during the year, which means that we have to disclose. It will record it to the next reporting period. All right, let's proceed. We have to look to some of the example and check whether you will be able to answer this simple standard. All right. VV Ltd is a listed company that's situated in Limpopo. The company has a reporting period on December 2021. The authorization date for VV Ltd is May 2022. Alright, so firstly, when you read the first statement, you have to analyze when will be your reporting, when will be affected by your IAS.10. Of course, it's between 31 December 2021 and the authorization date of May 2022. If any event happen between those dates, is what is IAS.10. What left is that you have to understand whether it's a non-adjusting or adjusting. Okay? The following transaction took place and has not taken into account. Then we have 3 adjustment. Alright. Required. Discuss the above scenarios in terms of IAS.10. How should we account this event? Alright. So this is a discussion question. So I write some of the tips from myself on how you should analyze each scenario so that you will be able to write many points. Remember, if you just started by concluding, you won't be able to in more marks because you have to write many points. Alright, so this is how to analyze the answer. Try to answer this on each scenario. Firstly, when you pick up IAS.10 adjustment and which need a discussion, firstly, figure out which event is this. Number 2, support why are you saying this is an adjusting event or this is non-adjusting event. How will you account for it? You have to understand that if we are talking about non-adjusting, you disclose. When we are talking about adjusting event, you record, not disclose. All right. Number 4, how are you going to generalize it, or how are you going to disclose it? So if it's adjusting, of course you have to do what? To record. In other words, you have to do a journal. Alright. Number 5, transaction effect. How this transaction is going to affect transaction. However, this part only apply it after you have learned a deferred tax. Okay. Number 6, then you conclude the whole discussion that you have discussed. So guys, on some point, for example, on number 2, support why this event, you don't only write one point, write more than one point, so that if it has 10 marks, you will be able to write a 10 point. Alright, let's go back to our transaction, then we answer the question. Number 1, on 23 January 2022, inventory of 35,000 burned down due to fire that occurred. The building of VVLTD building had 5 million current value. Alright, so here is an event. The inventory has burned due to fire. Now the question is this IAS.10? That's the first question. Yes, it's IAS.10. Why? It's happened between 31 December 2021 and May 2022. Alright, yes, it's IAS.10. We have to apply IAS.10. That's your first line. Number 2, which event is going to be affected by this transaction? That will be non-adjusting event. Why? There was no indication that the fire will happen. There was no any indication during the year. Alright. So how will you account for this transaction? Of course, we have to de-recognize the inventory because it has been damaged, and we also have to de-recognize the building. Then you show the journals. How this is going to affect taxation? This we're gonna do this one after IAS 12. Alright, then after that you conclude the above transaction, that this transaction will fall under a non-adjusting event and it will be only disclosed. Then you indicate that it will be recorded on the following year. Alright, then number 2, on 1 March 2021, the company went to court for customer who purchased milk and get sick. They went to court several times during the year. Nothing happened until court decided on 2 February 2022 to sue company 55,000. Is this IAS.10? Yes, it's IAS.10. Because the transaction happened on 2 February 2022, which is between December and May 2022. Yes, this is IAS.10. So which event is this? This will be adjusting event. Why adjusting event? We have to support the answer. It's because there was an indication that the company might be sold a money, because the company went a court for several times for the reason of client who claim that he got sick because of the milk of the company. So this will be adjusting event. How will you account for it? It will be recorded. Of course, we have to record because it's adjusting event. We have to do the journal for liability and what, and the bank. Okay. Then the tax effect is after we introduce IAS.12. We will do this one after introduce IAS.12, then we conclude. Simple as that. Number 3, office building has shown some crack during the year. Likely the rain were in control until 3 January, where the heavy rainfall, a building completely collapsed with the carrying value of 400,000. Okay, so now the other transaction, here it is. So during the year, the building showed the crack. Of course, this is going to be adjusting event because there was a indication. There was an indication that the building might fall. The crack is the indication that the building might fall. It will be adjusting event because there was indication. Then we have to do what? To de-recognize it. Then we show the journal. Simple as that. So guys, this standard is very simple and straightforward. As long as you understand what is the difference between adjusting event and non-adjusting event. Hopeful to see you next time. Please, if you haven't subscribed to this channel, make sure that you subscribe. See you.